In this video, we're going to be going over fair value gaps and how it can be used in your day-to-day trading to help you improve your win rate and your strategy overall. If you've not watched my previous video about market structure, be sure to go ahead and give that a watch. And stay tuned till the end, as I'll be going over some live examples on how to apply bullish fair value gaps and bearish fair value gaps. Let's get started. So what is a bullish fair value gap? Bullish fair value gaps is when price moves up at a very fast rate, which leaves an imbalance. So let's mark out this imbalance and show you exactly how you take a trade using a bullish fair value gap. So as you guys can see, this is my fair value gaps. It's in between two candlesticks, 1 and 2, in between the second candlestick. So what we do to take this trade is essentially wait for price to come back and tap into this fair value gap before moving to the upside. So let me go ahead and show you how you take this trade. So say this candle closure happened right here, price continues to move up like this, and then price goes right back down, taps into this fair value gap, and then what happens is price continues to make higher lows, higher highs, and move towards the upside. So how would you take this trade? So essentially, you would place a long position around the start of this fair value gap. You would put your stop loss below this candle, or if there's a low right here, so let's say this is the candle closure right here, you would put your stop loss just below this candle closure, and then you target for a simple 1 to 2, just like that. And once price hits your 1 to 2 target, you can take out. Now let's go over a bearish fair value gap and how it works. So the same thing applies for a bearish fair value gap. I'll show you just in a second. So our imbalance candle would be right here. So what we'd want is essentially price to come and tap into this fair value gap. Let me just mark it out. So this is our imbalance, and what needs to happen is price needs to come and fill in this fair value gap before moving towards the downside. So I'll give you an example quickly. So this is our candle closure, obviously. We closed right here. So let's say price moves down like this, goes up just like this, and then price would essentially come back down, making lower lows and lower highs. So where would you enter once again? Let me show you guys. So we'd put our short position right here, we'd enter somewhere around here, we would put our stop loss right here and target for a 1 to 2 once again. And just like that, you guys got a great understanding of bullish fair value gaps and bearish fair value gaps. Now we'll move on to a live example on XAU USD.